All right, let's get right into it. We're going to break down a really big shift that seems to be happening in the global economy. The whole idea is that the world is waking up to the value of hard assets, and that this is signaling a powerful, long-term boom in commodities.
And really, it all comes down to this one simple, powerful idea you see here. With supply chains getting shorter and countries hoarding essential resources, there's been a huge change in how people think. We're remembering that real, tangible things, the stuff you can actually touch and mine and store, well, that holds a totally different kind of value. And in this breakdown, we're going to unpack exactly why this great reevaluation seems to be happening right now.
So the main argument we're digging into here is that we're standing at a really critical moment. Think of it like a big pendulum. For years, the market was just stuck in a state of disbelief. Then it kind of swung over to some quiet curiosity. The argument is that it's about to swing all the way over to real, lasting conviction in a new commodities boom. Okay, so you're going to hear this term super cycle a lot. What does that actually mean? Let's be really clear. This is not about some quick market rally that just fizzles out in a few months. Nope, we're talking about a massive structural boom, a really powerful trend that could shape the entire investment world for a decade, maybe even longer.
Now, this is a super important point. The idea isn't that we're trying to call the very beginning of the party. That actually started back in 2020. The argument is that we've just come through a 2-year breather, a sort of consolidation phase, and now, as you can see with Wave 3, we might be about to enter what's historically been the longest, the strongest, and most powerful part of the entire cycle.
So, how can we be so sure this isn't just some random blip in the market? Well, this is where history kind of becomes our guide. The charts are showing this uncanny echo of the past. The patterns that are forming right now look almost identical to the start of the last major commodities boom. It's almost like history is handing us a potential roadmap for what's coming next.
Let's just take a quick look back at that last supercycle, which a lot of us probably remember. As you can see from this timeline, it played out in these really distinct acts. It kicked off with an ignition phase in '99, and then went into this massive liftoff phase, pretty much fueled by China's incredible growth. But, what goes up must come down. It all ended in exhaustion, collapsing during the 2008 financial crisis, and then had one last little gasp in 2011 before it was all over.
And what came after that boom is just as important for the story today. A full decade of hibernation. As you can see here, for 12 long years, commodities were basically stuck in a downtrend. Every single attempt to rally just failed, hitting the structural ceiling, and that just hammered in this deep-seated feeling of disbelief across the entire market.
But here, this is where it gets really interesting. While prices on the surface looked totally dead, a key momentum indicator, think of it like a tool that measures the underlying strength of a trend, called the MACD, it was telling a completely different story. While prices were hitting new lows, the MACD was actually making higher lows. This is what's known as a bullish divergence, and it's a classic signal that, hidden underneath all that pessimism, smart money was quietly buying things up.
And this slide right here just brings the whole technical argument together perfectly. Just look at the symmetry between these two columns. The market structure from 2020 to right now is an almost perfect carbon copy of what happened between 1999 and 2003, the period that launched the last supercycle. You've got the deep low, the initial climb, the sharp correction, and then the 2-year pause. It's this kind of clear, repeating historical pattern, what some analysts call a fractal, that gives them some real conviction.
Okay, so the charts kind of tell us how this might play out, but now we need to understand the why. And the why behind this potential boom is completely different from the last one. We've basically gone from a world of abundance to a world that's being defined by scarcity.
And this slide, it just captures that core difference perfectly. The 2000s boom, that was a story of abundance. It was powered by globalization, cheap money, and just this massive explosion in demand. This decade, well, this is a story of scarcity. It's being driven by a move toward localization, by years of underinvestment in new supply, and by the real, physical limits we're starting to hit. It's not about what we want anymore. It's about what we need. This is a necessity-driven repricing.
And here is a perfect, concrete example of that scarcity in action. For years, the world has been underinvesting in the traditional energy we still desperately need to power, well, everything, including the green energy transition itself. As you can see, capital spending in oil and gas is still down a staggering 30% from its peak, even while demand just keeps going up. That is a textbook recipe for much higher prices.
Okay, so we've got two pretty powerful forces at play. A historical chart pattern that seems to be repeating itself, and a new fundamental reality based on scarcity. But the story gets even stronger when you see how multiple drivers are all converging at the exact same time. It really does look like a perfect storm for commodities.
This analysis really boils it down to these 4 core drivers, all hitting at once. First, you've got the fractal behavior, that repeating chart pattern we just talked about. Second, the energy transfer. Think of that 12-year bear market like a coiled spring that's now being released. Third, there's this rare technical consensus, where pretty much all the signals are pointing in the same direction. And finally, the all-important sentiment shift. And each of these drivers just feeds right into the next, creating a powerful, self-reinforcing cycle.
And that brings us to the final and maybe the most important piece of this whole puzzle. Because let's face it, markets aren't just driven by charts and balance sheets. They're driven by people. They're driven by human emotion. And the collective psychology of the market tends to follow a very predictable journey in every single major trend. And this timeline just lays out that emotional journey perfectly. From 2008 to 2020, we had a full decade of disbelief. Investors were just completely not interested. Then from 2020 to 2024, the first breakout sparked curiosity. People started asking questions, right? Well, the central argument of this entire analysis is that we are standing right here, right at that pivot point, moving into conviction. That moment the market goes from asking, is this real, to declaring, yes, this is happening.
So what's the big takeaway from all this? Well, according to this analysis, it's really about shifting your whole mindset. This isn't about trying to be a short-term trader catching every little up and down. It's about recognizing a much bigger, long-term, structural repricing of hard assets and understanding that this could be a trend that lasts for years to come.
Ultimately, all of these signals seem to be pointing to one conclusion. Our world is fundamentally revaluing what is real. After a decade that was focused on digital and financial assets, the market seems to be waking up to that simple, powerful truth we started with. You can't print copper, you can't print oil, and you can't print wheat. Which, of course, leaves us with the big question. As this great revaluation of real things gathers steam, what happens next?